Good day everyone, we are from Group 3 and we would like to present about Gamuda Berhad. I, Darshini Munyandi, matrix number 291507, will present about Gamuda background and their project which is MRT Kajang line. Now let me explain about Gamuda Berhad background. Gamuda Berhad founded by Kun Yu Yin and Lin Yun Ling on October 6, 1976 in Ipoh Perak and headquarters in Petaling Jaya, Selangor, Malaysia, has grown into a prominent construction firm listed on Bursa Malaysia main board since August 10, 1992. Specializing in township developments, infrastructure and civil engineering, Gamuda also operates quarries and produces premixes. The company's global presence extends to Malaysia, Qatar, Bahrain, India, Taiwan, Singapore, Vietnam, and Australia. Their iconic projects are such as Mud Tunnel, Electrified Double Track Project, EDTP, Klang Valley Mass Rapid Transit (KVMRT). Their international projects are such as Pan Borneo Highway, Sarawak, Penang Transport Master Plan, PTMP, and donor group acquisitions. Gamunda's strategic growth and technological innovations underscore its significant contribution to modern transportations and urban developments, reflecting its pivotal role in infrastructure projects across multiple regions. Now, let me talk about the MRT Kajang line. The MRT Kajang line is a key component of the Klang Valley Mass Rapid Transit (KVMRT) project, designed to enhance urban transport in Malaysia. The Malaysian government serves as the main financer, with the funding managed by Mass Rapid Transit Corporation Sendirian Berhad (MRT Corp) under the Ministry of Finance Incorporated. This government funding covers various costs associated with the project including site acquisitions, constructions and additional expenses. The financing strategy for the MRT Kajang line also includes debt finance through the issuance of bonds by the government and MRT Corp, attracting investors due to the lower perceived risk. Additionally, loans from domestic and international institutions contribute to the project's financial structure. This comprehensive funding strategy, which combines government investment, debt financing, public-private partnership (PPP), and possible foreign aid, ensures the project's sustainability and effective acquisition. Let me pass to my groupmate Dexy to talk about how the project is funded.
My name is Dixie Kathleen Daimis, and I will explain about how the MRT Kajang line funded. So, a significant infrastructure project in Malaysia, the MRT Kajang line, also referred to as the Sungai Buloh Kajang line, is a part of the broader Klang Valley Mass Rapid Transit, which aims to enhance the urban transport. So, the Malaysian government is the main source of finance for the MRT Kajang line and plays an important role in the project's financing. This includes significant funds from the national budget, which are overseen by the Ministry of Finance Incorporated or Mass Rapid Transit Corporation Sdn Berhad, and this funding from the government cover a wide range of costs related to building the line, including site excavations, construction, and additional costs. In order to gather funds, the government and MRT Corp have issued bonds, drawing investors in with the perceived lower risk of the government debt. Due to the project's significance to the country and the support of the government, loans from domestic and international financial institutions also play a part and frequently come with advantageous terms. Next, through public-private partnerships, the private sector is also actively involved in this project. Through these collaborations, the cost is distributed and the efficiency and knowledge of the private sector is benefited. Private business are brought in to manage different parts of building, maintenance, and operation. The financing of the MRT Kajang line project also was secured through a comprehensive and diverse strategy, mostly managed by Dana Infra Nasional Berhad. Dana Infra was established especially to oversee the financing of the MRT projects in the Klang Valley, such as the MRT Kajang line, in order to guarantee effective and efficient financial management and lessen the government's direct financial burden.
Next, for type of project financing, we found project financing of syndicated term loan facility offered by Maybank is suitable for the MRT Kajang line project. A syndicate term loan facility is when a borrower or associated borrowers can obtain a loan or credit facility from multiple lenders under the terms and conditions of a single facility agreement. Firstly, in terms of financing structure, Maybank syndicated term loan facility have collaboration among multiple banks to collectively offer a substantial loan amount for financing different components of the MRT Kajang Sungai Buloh Kajalan project. Referring to the term loan, this includes covering construction expense, purchasing equipment, while funding other capital outlays. This type of syndicate loan has fixed repayment schedule with a specific term. However, in terms of interest rate, the syndicated loan facilities interest rate can be structured competitively by considering market conditions, project risk profile, and negotiated overall terms with the consortium of banks. Maybank provide an attractive interest rate to attract the project. Firstly, regarding the loan structure, factors such as the loan amount, repayment duration, and whether the borrower is provided any collateral also can impact the interest rate. Generally, loans with longer repayment terms or unsecured loans may come with high interest rate. In addition, the risk assessment and risk tolerance of other participating banks in the syndicated loans may play an important part in determining the final agreed upon rate.
Good morning to the doctor and my fellow friends. Next, I will talk about repayment and collateral. Repayment syndicated loans determine how and when the loan will be repaid by the borrower to the lender. This payment is very suitable along with the cash flow and achievements in the construction of MRT Kajang Line project, either by the lump sum or periodically. It could include a grace period during the construction of the Kajang Line MRT phase and a structured repayment plan after completion. For the collateral requirement is one of the keys for the achievement and construction of MRT Kajang Line. Project assets are collateral requirements for the MRT line's physical infrastructure such as trains, stations, and tracks. It also ensures that the lender can take over these assets if the borrower defaults.
In addition, about the benefits. Firstly, benefit for Maybank is the revenue will increase. Interest earned will be significant revenue stream for Maybank. Syndicated loans involve a large amount of loan while interest is charged over the loan term. Besides that, bring a good image of Maybank. Engaging in the MRT Kajang line, which is a national infrastructure initiative, enhance Maybank's standing as a key player in the Malaysia financial industry that will be an advantage for Maybank. While benefit for MRT Kajang line in securing the funds, Maybank loans facility fills the financial gap necessary for the successful completion of the MRT Kajang line project, thereby giving benefit to all Malaysian public to use the MRT Kajang line. Next, this will bring a good improvement of infrastructure to the public. The MRT Kajang line project successful improvement has enhanced Malaysia public transportation infrastructure. This could lead to the fulfillment of economic prospect and enhancement in the residents' quality of life.
Comparison between Maybank and CIMB Bank offers syndicate loan for MRT Kajang project based on financial strength, syndicate experience, risk mitigation, competitive interest rate, and bank support. In financial strength, Maybank is most established than CIMB Bank that provide a strong financial support and experience. It also followed with syndication experience, which is Maybank have more history and get awards in offering the large project. Besides that, Maybank also have more expertise in handling the syndication lending than CIMB Bank. So it will be easier to understand about the large project. For competitive interest rate, Maybank have more flexibility than CIMB Bank, but offer high interest rate than CIMB Bank. Meanwhile, Maybank also have strong bank supports in collaborative because have many experience in provide syndicate loan than the CIMB Bank. Therefore, Maybank is more suitable and has expertise in offering a syndicate loan for the MRT Kajang line. However, CIMB Bank also have reputable financial institution which provide a lower interest rate that may be suitable for the MRT Kajang line project.
Hi, my name is Rasha Bitisama and my metric number is 294983. I will talk about the risks that may face by the bank in supporting this project. The first risk is credit risk. Credit risk arises from the possibility that Gamuda Gardens might default on its obligation, causing financial losses for the bank. To reduce this risk, the bank must assess Gamuda Gardens' creditworthiness, ensuring the project has enough cash flow to meet debt obligations. The bank can mitigate credit risk by setting credit limits, requiring collateral or guarantees, monitoring financial performance regularly, and having contingency plan for defaults. By proactively managing credit risk, the bank can better protect its financial interests and minimize potential losses from the project. Secondly, the bank also needs to consider market and economic conditions that could impact the Gamuda Gardens project, particularly the MRT Kajang Line project. For example, the market fluctuation, such as changes in sales volume, profit margins, and discount rates, can affect the project's financial performance and Gamuda Gardens' ability to meet its financial obligation. These changes influence revenue generations and profitability, and adjustment in discount rates can alter the project's risk and return profile. It's crucial to monitor market trends and economic indicators to anticipate risks and adapt risk management strategies. This helps the bank make informed lending decisions and effectively mitigate potential risks. Other than that, the risk that the bank might need to deal with is sensitivity risk. The sensitivity analysis in the financial statement shows how changes in key assumptions can affect the project's value. The bank should consider these sensitivities to understand the project's vulnerability to various scenarios and make informed lending decisions. For example, if a 5% drop in sales volume significantly reduces the project's value, the bank can factor this into its risk assessment and loan structuring. These analyses provide valuable insights into the project's risk profile, aiding the bank in making well-informed lending decisions by understanding how changes in key assumptions and external factors can impact the project's financial health. Lastly is the regulatory risk. This risk arises from changes in laws, regulations, or government policies that could impact the project's operations and financial stability. For instance, climate-related regulations could affect the useful life and fair value of property, plant, and equipment. The bank must assess how these risks might impact the project's financial health. Changes in regulations could influence operational efficiency, maintenance costs, and overall profitability. By understanding these regulatory and legislative risks, the bank can better anticipate potential challenges and incorporate these risks into its risk management framework and lending decisions, ensuring comprehensive evaluation and effective mitigations of potential impacts. That's all from our group. Thank you.